Hey everyone, and welcome to The Explainer. Today we are tackling a topic that hits super close to home for almost every active trader out there, the trusty spreadsheet journal. Now look, we all use them and they are an absolute staple of risk management. But today, we're going to fundamentally shift how we look at them. We're breaking down the crucial differences between traditional manual spreadsheet journals and live data views, specifically looking at how tools like DRKN are totally changing the game. We're going to uncover why relying solely on past data might actually be quietly sabotaging your real-time risk management. Okay, let's dive into this. Here's our roadmap for the explainer today. We're going to start chronologically with the real strengths of manual journaling, then uncover this tricky right now blind spot. After that, we'll walk through a midweek crisis that proves exactly why we need live data, compare manual errors to live data, and finally, build the absolute best routine. Let's get to it.
All right, Section 1, the value of spreadsheets, finding patterns in the past. Now, if you are sitting there right now clutching your trading spreadsheet, don't worry. I promise we aren't here to tell you to throw it away. A well-kept spreadsheet is a genuinely fantastic tool. They are exceptionally strong for pattern finding after the fact. When you need to comb through dozens or hundreds of past trades to see which setups produce positive expectancy or, which sessions consistently lose money, there's really nothing better. But the key phrase here is after the fact. Bless spreadsheets capture what numbers alone just can't. Your qualitative records. Why did you take that trade? Were you sweating bullets while holding it? Did you actually follow your rulebook? This kind of data is utterly irreplaceable because an automated tool simply cannot log your emotions or your inner rationale. That right there is the true superpower of your manual journal. Moving on to Section 2, the right now blind spot, or what happens when manual entries lag. Okay, so here's the danger zone. When you are sitting in the trading seat actively managing positions, time is basically your enemy. Imagine this. It's 11 a.m. on a Wednesday. You're sitting on an open position that has just aggressively moved 4% against you. The only question that matters is, what is my risk right now? But your manual journal, meticulously updated yesterday at the close, offers absolutely zero help. It has no concept of what is happening this very second.
It's really about contrasting what these tools are built for. A spreadsheet journal asks, was my process good yesterday? But a live account view asks, what is my risk right now? When you're faced with a high-pressure decision, like do I hold, add, or close, your current real-time exposure matters way more than last week's log entry.
Oh, and there's another insidious problem with relying solely on manual logs. Manual entry error compounds silently. A mistyped entry price, a forgotten funding fee. These little mistakes quietly skew your win rate calculations without anyone noticing. It just drifts and drifts until weeks later the numbers stop making sense entirely.
Section 3, a tale of two reviews.
Let's look at the midweek crisis. Let's ground these theoretical differences into a very tangible, high-stakes scenario. And this brilliantly illustrates the problem. Imagine you take 3 consecutive same-day trades on a Wednesday. The first trade uses a conservative 3x leverage. The second trade bumps up to 6x. The third trade literally doubles the first, pushing up to a reckless 9x leverage. Your leverage is secretly creeping up in the heat of the moment. Here's the catch. If you only do a weekly spreadsheet review, you are going to catch this 9x leverage disaster on Friday. The spreadsheet will give you a perfectly clear explanation of why your week was deeply negative, but it only explains the outcome after the fact, when the damage is permanently done. But now, compare that to a live system. Checking a live view, like DRKN, on Wednesday afternoon would have caught this silent compounding risk in real time. It flags the drift while there is still a week left to correct it. Seeing that objective data pulled straight from the exchange would give you the hard stop you need, completely preventing Thursday and Friday's heavy losses. Section 4, manual errors versus live data, comparing the workflows. Now, what's really interesting about this slide is structurally breaking down how these two tools operate side by side. Look at the timing. The spreadsheet is manual and lagging, while the live view is instantaneous. For errors, the live view pulls directly from the exchange data, meaning zero transcription errors. And effort? Well, a live view just runs automatically. It requires literally zero extra effort compared to the manual discipline a journal demands. And let's be honest, manual discipline is tough. That's why we constantly see these incredibly relatable journal-only mistakes, waiting until Sunday to notice that leverage creep, never logging your total margin context, And, my personal favorite, the temptation to just skip uncomfortable entries during losing streaks. We've all been there, but that is exactly when we need the hard data the most.
Finally, Section 5, building the best routine, the ultimate synergy.
So as we wrap up, I want to be clear. We aren't throwing away the spreadsheet. We are elevating it. The most robust framework is this two-workflow synergy. You keep your qualitative notes in the journal, but you use an automated live view for your quantitative exposure. Your numbers no longer rely on memory or manual reentry, but you still capture that absolutely crucial why and how.
To quote the source material directly here, a live account view complements it rather than replacing it. This is the definitive takeaway. We want to add a live view for what's happening right now, absolutely not abandon our historical tracking. They work together perfectly. So I want to leave you with this final provocative thought. If a sudden violent market swing happened while you were watching this explainer, do you actually know your current exposure right this second? Don't wait until Friday to find out. Get a live view, check those real-time vital signs, and keep your risk in check. Thanks so much for joining us for this explainer, and we will see you next time.